How should investors be tracking the crypto market? Joe Shu from Crypto Consulting Institute joins me now. Joe, great to have you with us in studio. Thanks for coming in.
Thanks so much for having me.
So what a week as well for you to be on the road with Bitcoin cracking that $120,000 mark.
Yeah, I guess it's expected. It's been anticipated for quite a while now. And it's great to see it finally come to fruition. I think when you're, especially as an analyst and an educator, when you see the patterns, the data and the projections, and you try to inform and educate and help people understand where the market's going, and then it happens, then people really start to listen more. So it's great that it's really starting to take shape.
So does that mean, and that's sort of talking about the FOMO trade there, that the lift sort of lifts all boats, the tide lifts all boats, and we see further rallies, further records?
Yeah, absolutely. I think retail participation is still not super strong. It is coming, but I think mostly this is institutionally driven. So what typically happens, as we know, emotions are rife in any investment industry, but more so in cryptocurrency because of that blow-off top nature. And I do think people, unfortunately, still have a gambling mentality when it comes to, or the retail participants, when it comes to cryptocurrency investing. So I expect when prices continue to get elevated and continue to push up into the 130 range, then you'll see more retail participation, a short-term spike at the top, and then most likely a sell-off, because I do still think we're in a 4-year cycle period.
Okay, and so where do we potentially get to before we sell off? Do you have a target?
Yeah, I don't have a specific target because it's important to continue to track the market conditions. But looking at basic Fibonacci extensions, it could be up to 180 US. Most likely, I think around 150 would be a logical target, and 134 to the lower side now. But we've hit the 1.618 Fibonacci extension, which was 120,000. So we've hit that target. The recent sell-off that you just mentioned was, I believe, mostly similar to the S&P 500. We went through marginally elevated inflation levels of 2.7% instead of forecasted 2.6. So I think that added to the marginal pullback that did happen, because the S&P and Bitcoin both pulled back at the same time on the same day on the 15th, and then instantly rebounded. The thing that we were watching was the follow through with volume. So we wanted to see a continuation of volume coming in, which it now is. So I do expect that there will be upside momentum. The interesting part is now the altcoins are really starting to wake up, as we were expecting. I think it was only when I was first coming on this show, I think it was something like 12% of the top 200 were beating Bitcoin over the last 90 days of performance. And now that's up to 31%. So you can see the transition of the appetite into higher risk assets. And a lot of that can be driven by the upcoming ETFs that are happening. So I know XRP is going to be happening soon. Solana's just happened, and that's actually live now. There's basket ETFs that are coming. So I think a lot more interest is coming into the broader spectrum. Litecoin might have one coming, and I know that's starting to look really strong as well. And
a lot more regulatory framework too. We touched on what's happening in the US, but the RBA also looking into looking at cryptocurrencies as well, or digital currencies.
Yeah, they have to. I was on a podcast the other day with Independent Reserve, and I was asking him or what the exchange sees from that regulatory perspective with Australia, and they are transitioning, but in other parts of the world it's already happening. And JP Morgan with JPM Coin, if they start saying to Australian commercial banks, like, what are you doing here, and how evolved are you, and how developed are you, and if you're not, then you're going to have to start using our coin, then it completely throws off their value add as a business. So I hope that Australia can really start to put themselves on the map here, because if they don't, then they're going to get swallowed up by the US, who clearly have defined they are going to do everything they can to be the crypto powerhouse in the world, and they are.
So do you think this RBA trial, this test, this 6-month test, means that we're not going to potentially be left behind?
No, I think it's a positive transition. And I hope that it's wider than just this, and it's not just RBA, but it encompasses all businesses as well that start looking at potentially a MicroStrategy playbook for using their funds in treasury reserves to start transitioning. So I expect that it will be a monumental shift, but how quickly does it come, and what's the impact and the loss of ground to other countries around the world, especially top talent. If there's top talent in Australia and it's slow moving, they're all going to go.
Yeah.
And I know obviously we live on a global platform now, so it's slightly different, but
yeah. The brain drain. All right, now you are in Sydney for a reason. Give us the reason why, and I guess what you've learnt from a decade of investing in crypto. In a bite-sized answer.
I'm in Sydney for a few reasons. So I was on a podcast yesterday. I ran an event with Independent Reserve last night. I'm fortunately enough to be here in the studio, which is awesome. And I'm running an event tonight for the top 40 SwiftX customers. SwiftX, obviously one of the largest exchanges in Australia. Just sharing some insights and guidance as to where I think the current market's at and what to be aware of and how to really maximize profits through this time. My words of wisdom from being in the crypto industry over the last decades, just some real high level, simple stuff. Have a decade vision, not a 10-day vision. I think a lot of people come into this and they're like, oh, I've got to make so much money in this short cycle, and if I don't do it, then I'm kind of doomed. Bitcoin's going to be trading over $1 million in the next decade. So if it's at 120k, and sure, you might not sell 150, 180k peak, look to the long term and start building a really sophisticated, diversified portfolio where sure, you might have property, sure, you might have stocks, but what allocation do you have to Bitcoin or crypto as a wider framework?
Yeah.
So I think it's just trying to tone down the intensity that the volatile market does have and say, where am I positioning for the long term? And am I creating multi-generational wealth for my kids here? Or is it just I'm looking to kind of get rich and get in and get out, which I just don't think is the right approach or strategy to this volatile market.